What's up everyone, Matthew Winters here and welcome back to my channel and welcome to another Trade Week Recap. For those that are new here, Trade Week Recap is a segment on every Friday where we will take a look back at how the dividend portfolio is holding up through the trading week. We'll have a look at what new positions I have bought, if I've sold anything, we'll look into why I chose to exit those holdings, and also have a look at how the dividend yield is looking and what the annual payout is standing at. And then to finish it off, we will look at what upcoming dividend payouts are pending. Now, if you're new to investing and want to use the same brokerage I do, which is Robinhood, use my link in the description below and you and I will get a free stock with a possibility being valued at a couple $100. It is absolutely free, it's very user friendly, and a great platform to start investing. And also, if it's your first time here, don't forget to hit that like button as it really does help grow the channel. And if you enjoy the video, make sure to subscribe for future dividend investing content. So this week was a 4-day trading week due to Memorial Day. When the markets opened back up on Tuesday, we did have some green days in there along with some slight red days. I didn't see a whole ton of opportunities to buy into positions to dollar cost average down. However, I did manage to find a couple which we will go over. And if you remember from my last video, I was looking to exit 4 positions: General Electric, United Airlines, American Airlines, and westrock. I did end up exiting 3 of the 4, so we will go over those. And I did end up exiting Hilton, which is one I've had on my mind for a while. I did find a good exit point, so we will chat about that one too. Now, if we take a look at how the portfolio is performing, we are during trading hours right now, so that will fluctuate. But we can see we're down about $505 today, just about 1%. If we look at the 1 week, we can see we're up about $1,600 at about 3.4%. If we look at the 1 month, we can see we're up about $1,900 at just about 4%. And if we look at the 3 month, which is the life of this portfolio, we can see we're up about $5,000 at 11%. Now, if we move over to Simply Safe Dividends, we can see that the annual income is sitting at $1,301. We can see that the dividend valuation on average is about 2.91%. We can see that our dividend growth over the last 5 years is about 8.5%, so that's definitely up since we've been trimming off some of the holdings in the portfolio that paid no dividend at all. Now, if we look at the diversity of my portfolio, you can see that we are starting to even out the sectors a little better. The positions I have been exiting, I have tried to move that money into the sectors that are lagging behind. It's a long process to do it properly, and there are certain rules I try to keep myself at to remove FOMO, which is fear of missing out, or buying into holdings when I know it's not the right time to enter. I really want to bring up the standings in my lower percentage sectors, but patience is the key to smart investing. So let's have a look at the positions that hit the chopping block this week, starting off with General Electric. GE has really been struggling for the past 5 years. The stock price has plummeted as they have tried to consolidate their business into the more profitable sectors. Since around 2016, their dividend yield has consistently shrunk and is almost non-existent, sitting at a 5-year average of 0.61%. And it's also holding a borderline safety score of 45. Now, I think GE is still a good company looking at it on a macro scale. However, I think they just need time to consolidate more into the parts of their businesses that are working while trying to trim the fat. At this time, GE just doesn't fit into the portfolio, so I sold 100 shares at $6.89 and managed to lock in about a $50 profit. In the next 2 positions I exited was American Airlines and United Airlines. I sold 20 shares of American Airlines at $10.87, and I sold 14 shares of United Airlines at $28.32, locking in about $100 in profit between the 2 of them. So, as a speculative play, I bought 4 of the major airlines back in early April as they were battered down by the travel restrictions. I still hold Delta and Southwest and will continue to hold them for the long term, but I wanted to trim American and United because first, the absence of a dividend payout. As you guys know, I'm trying to clean up the portfolio and move the few companies in my holdings that don't pay dividends out. And second, when looking at the balance sheets of the said 4 airlines, Delta and Southwest are better positioned to make it out of this downturn, and when they do, to be more of a viable financial investment. In the last position I exited was Hilton Worldwide. I sold 3 shares at $83.16, locking in a profit of about $40. And like the airlines, Hilton was a speculative play, but to me was just pointless to add shares to as there was no dividend yield. I would rather put my money into other consumer discretionary companies such as Genuine Parts Company, McDonald's, or even Starbucks. And those 3 companies are some that I own in the portfolio and feel are a better investment at this time over Hilton. So those are the positions I exited this week. I did not add any new holdings to the portfolio, but I was able to find a few opportunities to dollar cost average down companies that I already own. So starting with today, we can see I bought 10 shares of Pembina at $24.47. I bought 1 share of Pepsi at $130.78. I bought 5 shares of Pembina at $24.62. We can see we got a $3 dividend from Westrock here. Had another 10 shares of Pembina at $24.82. Bought 3 shares of Johnson & Johnson at $145.50. And that was all I found for opportunities to dollar cost average down positions that are already in the dividend portfolio. And before we close out, I just want to show you what dividend payouts we have coming up. As time goes on, these payments are getting bigger and bigger as we keep adding and dollar cost averaging solid, healthy positions. And as a dividend investor, that's what it's all about. So we can see here from Raytheon, we have a $3.80. Duke Energy, $14.18. Microsoft, $1.02. Chevron, $2.58. ExxonMobil, $8.70. Norfolk Southern, $3.76. Johnson & Johnson, $10.10. Honeywell, $2.70. Pfizer, $1.14. RGA, $4.20. Valero, $4.90. Visa, $3. Walmart, $1.62. Wells Fargo, $7.65. Intel, $6.60. The S&P 500 high dividend, low volatility ETF, $3.11. And the Cohen & Steers Quality Income Realty Fund, $1.60. Now it all adds up, guys, and trust me, it's a great feeling getting these payouts. Anyway, I hope you enjoyed the weekly recap. If you did, make sure to smash that like button because it really does help out this little channel. And as always, if you want to follow me on my dividend journey, make sure to hit that subscribe button. And don't forget, if you're new to investing and want to use the same brokerage I do, which is Robinhood, use my link in the description below and you and I will get a free stock with a possibility of being valued at a couple $100. Robinhood is absolutely free, it's user-friendly, and a great platform to start investing. Anyway, trade safe, take care.